Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. What I would like to do today is to talk about one of the most important companies in the stock market. But before we do that, please like the video, subscribe to the channel. It does not cost you a penny and really genuinely helps the channel. Also, if you are interested, you can join us on the Patreon account where you get access to all the buys and sells that I make on daily basis. You get access to the private Discord, the Sharia compliant investing in ebook, as well as all the different trackers and the watch lists and so on. And it will cost you only 15p a day, where you can actually, if you go to the Discord, you can actually share good practices with some of the brothers in there who are sharing on daily basis all their buys and sells and so on. Now let's get started. So the semis are one of the reasons why the stock market is up so much this year. Since November, end of October, November, the stock market has been going up and we have not stopped yet. It looks like we're going to continue doing that. And a lot of the gains has come from the semiconductor companies. And that's where we're going to start today. So you've got companies like Nvidia, you've got companies like Broadcom, for example, AMD. Each one of these companies are up over 15%. Some of them are just in the last only 6 months, by the way. Qualcomm is one of the companies that I've had in the portfolio for a long time. And right now it's actually up 60% since the beginning of the year, which is absolutely ridiculous. Because it wasn't long ago that it was actually, I was basically in the red. Of course, some other technology companies have done as well as well. You've got the Metas, you've got a couple of other companies. Amazon hasn't done well, but majority of the gains comes from this side of the thing. So whether the semis or the semiconductor manufacturing companies and so on. So what I would like to do today is talk about this company, and this is Taiwan Semiconductor. This company has the market share in terms of the market share for the foundries. Foundries are companies. So basically, let me just quickly explain how this works, okay? The companies like Nvidia will design their own chips. Companies like Qualcomm, Broadcom will design it. They design it. They then send it to TMC. They then manufacture it, and then, so of course, you give it to them. And of course, that's how they make their money. There's not that many companies out there that do it. Samsung is one of those. Global Foundries is another one, and so on. But when you look at the market share in Q3 of basically last year, you can see almost 60% it belongs to Taiwan Semi. Then you got Samsung, you got Global Foundries, and so on. So majority of the companies, including Intel, goes to this company. So Intel are now trying to get into that market, of course, become one of the foundries as well. That's why they're building $20 billion manufacturing, in different places in the US and so on. So what I want to do now is I want to quickly show you some of where the majority of their money comes from in terms of their revenue side of things. So this is based on the Q4 2023, so the last report that they've reported. So you've got the smartphone, which is about 43%. You've got Internet of Things, you've got automotive. Okay, you've got the digital consumer electronics, others, as well as high performing computers. So you've got all of these sections, and the majority of that money comes from the high performing computers or just computers, as well as, of course, the smartphones. So 43% here, 43%, the rest are quite a little bit small. So that's where the majority of their money comes from. So any companies like, for example, Qualcomm, basically they design their own chips. So the Snapdragon, for example, they design it, they send it to Taiwan Semi, and this company actually manufactures it for them. So this is the reason why I said this company is one of the most important companies, and this is probably one of the reasons why the situation between China and Taiwan is actually very unstable at the moment, but the US is doing everything they can to protect Taiwan Semi. And that's why they're also trying to diversify by having companies like Intel. The US government is actually giving money to Intel to basically build their own become their own manufacturer or foundry company, because they are worried about what might happen in China. So what I'm going to do now is I'm going to look at the financials of this company. As you can see right now, it's trading $146 per share, and for the 1 year, 40% up. 40% up for the 1 year. And as you can see here, forward PE of only 23. So it still seems cheap considering it's actually up 40%. So $146 per share right now. So let's look at a bit more details, okay? As you can see, it has 647 billion market cap, dividend of 1.5, and safety of 62%. So they do have dividends, but they're not really a dividend paying company. They're not really well known for that, but you will see that in a second. So 41% in terms of payout ratio. In terms of dividend, latest increase was 17%. 10 years of increase in that dividend. So it's actually quite good. That's interesting, actually. Okay, 18% in the last 20 years, which is not bad. But the reason is because they don't actually care increasing it every single year. Okay, so they increase it here, there. Here, the 1 year is basically they increase it, and the next year they don't increase it. So this is the reason why I said in terms of dividend streaks is actually not great there. Annual payout is you got $2.23 for every share of this company that you own. And right now it looks overvalued based on the dividend yield. So it used to be about 2%. It was down for quite some time. That's probably why it's been down. So the last 5-year average was about over 2%. But right now it's 1.5 or just over 1.5%. And the PE used to be about 90. Let's call it 20. Right now it's about 23 something. Okay. So for that reason, it seems a little bit expensive. But the earnings per share ratio side, payout ratio of 37%, and then free cash flow payout ratio of 61%, which is quite nice. Earnings per share is increasing massively. So we got in 2014, we're talking about $10. Right now, $38 right now next year. Free cash flow per share is also increasing. And then when we look at shares outstanding, it's actually stable. It has not actually increased that shares or decreased those shares forever. So they're not buying back their own shares, which is very interesting. So, but they're paying a little bit dividend. Interesting. Total sales, okay, basically is heading the right direction. Next year it looks a bit flat. So let's have a look at that. Let's go back to Seeking Alpha. I want to see what that looks like. So in 2023 was 70.42, then 84. So that's about over $10 billion. And then again, over almost a $15 billion growth from the next, expected to grow nicely in the next couple of years. And then looking at the estimates as well, is also heading the right direction from actual of $5.18 to expected $6.27, and then expect $7.70, which is nice, and it looks like it is heading the right direction. So return on equity, we're looking at about 26%, return on invested capital of 21%, operating margins of 43%, and a free cash flow margin of 13%, which is quite nice. Net debt to EBITDA right now is non-existent, so this company does not have much of a debt right now, which is really, really nice. Now, looking at the valuations, if we go back here, okay, a couple of more things. In fact, we'll look at the earnings side of things, estimates moving forward, double digits for the next 3 years, double digits in terms of revenue as well, which is really nice to see. According to Yahoo Finance, so next year they're expecting 22% growth next, and then every single year after that they're expecting about 4%, which is not bad at all. The average price is $125 per share. That is a buy right now towards almost a strong buy. And if we go back here, you would see it is actually strong buy from Wall Street, strong buy from Quant, and basically a buy. And this is one of the reasons I wanted to check this out. So if we go and look at Wall Street, we've got 8 strong buys, 5 buys, 1 hold, and no sales or no strong sales, which is quite nice to see. But it is expected to decline about 11%. So really get into that overvalued territory right now. Although they're saying it's a buy, it's basically their price target is slightly lower. So it's $129 per share. Right now it's $146 per share. If we go to Morningstar, as you can see here, fairly valued right now because it's 3 stars and $151 per share is where the price should be. Right now it's $146. So it's slightly bit upside from where we are now, which is quite nice. And the company has a wide economic moat. Looking at the last basically 10 years of what the company has returned in total return, it's about 23%, which is quite nice. Right now, comparing with Intel and the S&P 500, so for the 1 year, it's up about 64%. The S&P 500 is about 28%, and 71% for Intel, which is quite interesting. I didn't think Intel was up that much. But when you look at the last 3 years, this company is up at 35%, the S&P 500 34%, and Intel is down 20%. I didn't want to compare with the rest of them, but Intel, I just really care the S&P 500 and the company itself. Intel was I just added that there. 335% in terms of the last 5 years, and only the S&P 500 only returns 86%. And when you look at the last 10 years, 932 against $180, sorry, total return. That includes dividends and so on. So you can see the top line here, that orange line is actually the company, and is actually outperformed the S&P 500 massively, which is quite nice to see. So yeah, the overall, this company is really one of the most important companies out there. In my opinion, I think it will continue to be in the next at least 10-15 years until the US basically companies catch up with them. There's a lot of bullish basically people saying, of course, all sorts of amazing things about the company, strong buys and buys and so on. But as always, do your own research, find out more information about it. One thing, I actually saw an article about this. Basically, India approves about $15.2 billion worth of chips manufacturing investment, which means then of those companies will go back to Intel, so we'll go back to Taiwan Semi and ask them to produce that. So which is they will be directly benefiting from that as well. So it's a really interesting company. The only issue is with this company, you cannot buy it through ISA, but you can buy it with the investor account or any other account that you have. But don't forget, you'll be taxed if you live in the UK. I don't think in the US, I think you can buy them through basically sheltered kind of tax haven accounts, if you like. Okay, so I'm sure you can buy them, but in the UK apparently we are not allowed to buy that company through here. So that's the reason why I actually don't own in here. I would have loved to have that and ASML together. That would be absolutely wonderful. I probably would have taken some profit of Broadcom and buy more of Taiwan Semi and then keep them all together, but unfortunately we're not allowed. Yeah, that's what I wanted to share with you guys. I hope you're enjoying the content. If you do enjoy this, please always like it, subscribe to the channel, let me know if you have any questions. I'm going to continue doing this inshallah until of course I can, but so please help with the channel of course by subscribing and let me know if you have any questions. Have a wonderful day, enjoy your weekend. Assalamu Alaikum.